Hey everybody, Chuck Barone here. Monday, November the 21st, 2022. Man, this year is going by quick, isn't it? I can't believe it. This week, on Thursday, we're already going to have Thanksgiving. I mean, it just seems like it was only yesterday they were putting up the Christmas decorations, right? It's so fast. Wow, time's going by. We're almost to the end of this crazy year. Hopefully, it's going to end well. And next year will be a better year. But hopefully it won't go by as fast. Anyway, as always, we want to thank everybody for supporting the show, watching the videos, your likes, questions, comments, and all the things you guys do every day. We really appreciate the support. Couldn't do it without you guys. Very, very grateful. In the markets today, kind of a quiet day in the markets. Stocks today, a down day. Looked like the market really wanted to go down. If you look at the chart for the day, it started the day pretty negative, rallied back up into positive territory, was kind of skirting the line and finished down just a little bit. I think that the market now is super data sensitive. There's not a lot of direction in the market, so it just kind of moves with the data that comes out that day or the day before. The markets are, it doesn't have a good feel right now. I think the trend on the market is still down. And with all the mixed signals in the economy, that's not a surprise. The bond market today was basically flat, with the 10-year settling at 3.82%, basically unchanged. The 2-year up 4 basis points to 4.56%, as the spread gets even wider now. Now you're up to about 74 basis points. So pretty soon you're going to have a 1 whole percentage point spread inversion between the 2-year down here and the 10-year, or the 2-year up here, higher rate, and the 10-year down here, lower rate. It just keeps getting wider. And the way I understand it, the bigger the inversion, the bigger the recession that follows it. Great. The dollar today was up pretty strongly, back up over 107 on the index, 107.84, almost to 108 again. The dollar's still the champ as far as other world currencies go. This is still a strong number on this index. I don't know really what can bring this dollar down until the Fed starts loosening monetary policy again. As a result of a strong dollar today, obviously, though, commodities taking it on the chin. Metals down today. Gold down $12.90 to $1,738 per ounce. Silver down 11 cents, $20.84 per ounce. Obviously, with the dollar going up like it was almost a full point on the index, that puts a lot of pressure on commodities, especially precious metals. Oil today down not very significantly, about 0.5%, but breaking under $80 per barrel for West Texas Intermediate, sitting at $79.74. I guess the story on the oil is they're afraid that there's been some big COVID outbreaks in China, and China was talking about relaxing their zero COVID. Now this may cause them to go back on relaxing it. So now they're worried about demand for oil, driving the price down. Gas today continuing its crazy roller coaster ride up and down, up 6.5% to $6.70 for their million BTUs. Guys, these are very difficult markets. I'm not saying don't own Exxon. I'm not saying don't own, oil stocks or gas stocks. I'm just saying if you're trading this market, be very, very cautious. It looks like there's just some wild gyrations happening. Bitcoin today down $635, 15,647 last time I looked. It's almost do or die time for Bitcoin now. This FTX catastrophe is it's really, really, really bad for all cryptos. Now the doubters, the enemies of crypto are piling on pretty heavily. It's starting to look like this is a pretty massive fraud here. They're talking about Madoff comparisons. If it turns out to be the case that this was an $8 billion Ponzi scheme, and I'm talking about $8 billion they're guesstimating is going to be the size of the losses investors are going to suffer, I think that could pretty much, without without major regulation in the crypto markets, which basically defeats the whole purpose of crypto. I just don't know how crypto keeps going. So let's keep an eye on that. If you have your money in its crypto markets, if you have Bitcoin, if you have other cryptocurrencies, be very, very cautious. Hopefully this is not like all of your portfolio in these kind of investments. And this was something I would be considering pretty speculative. Hopefully it's just a small percentage of your portfolio. If it is a major percentage of your portfolio, I'm not your stockbroker, but I would advise you to take a good look at that and maybe consider, if not selling some of your position, even if you're going to suffer a loss here, at least trying to find a way to hedge it so if there's further declines, you're protected. This week, every Monday like I do, I'll tell you guys we got big data coming this week. Today and tomorrow are big earnings days. Lots of companies, big companies, important companies coming out with earnings that'll give us an idea the direction the economy is going, how consumer spending is holding up, how manufacturing is doing, and different things about this economy, real estate. So we'll be getting a lot of earnings Monday and Tuesday. Wednesday is the big day with the short week and everything. So Wednesday, we'll get durable goods. We'll get initial jobless claims, which is going to be an interesting one. We're going to get the mortgage bankers index, and we're going to get new home sales, which I expect both of those to be pretty ugly. We're going to get the University of Michigan Consumer Index. So we'll get an idea of where consumer sentiment is expected to go, or is that right now, and what consumers are expecting. I think that the big one out of all of these is going to be your jobless claims. I think that they're expecting claims to fall from last week's. I think that the job market is the one thing that's holding this economy together here. And I don't know, it's been my experience, companies typically do not hire if they're not expecting their businesses to do well. Now, I know there's probably some seasonal hiring going on right now, the retailers for the Christmas season coming up, but the job market stays strong. That continues to give the Federal Reserve the leeway they need to continue to raise rates the way they're going to tame this inflation, guys. So, for all of you people out there who are thinking there's going to be a real quick pivot from the Fed, I just got to say, I guess it's debatable. I would be on the other side of that debate. Thursday, of course, Turkey Day. The Bills got the Lions Thursday morning. Go Bills. I'm looking forward to a nice holiday with the family. Friday, the markets will be open, but only for an abbreviated session, probably be very thinly traded. The markets, most people on Friday are going to be thinking about Black Friday, time to get out there and get the Christmas season underway and bring these retailers into the black for the year. Business stuff you guys need to know today. Interesting stuff today. I was reading that consumer savings. Did you know? I was reading, I didn't realize this. They said that consumers saved $1.7 trillion during COVID. Part of that was stim money people got. Part of that was nowhere to spend money at, that kind of stuff. So apparently Americans were socking away the savings. And that is what's keeping spending going. That's what's keeping us from having a revolt on the streets with the way prices are. I mean, my wife comes home from the grocery store now. She used to love going shopping. Now she comes home, and every time she does, it's such a disappointment when you see what you get for your money nowadays, man. It is just crazy. Stuff that they used to basically give away, stuff that was under $1 is more than $2 now, and it just keeps going up, up, up. Hopefully consumer savings are going to last long enough to get us through this patch we're in here. I got to say, though, guys, if this is a recession, it's the oddest recession I've ever seen. It seems like it's only certain sectors that are getting hit in this recession, right? Real estate, interest rate sensitive stuff, car sales still going up, and they're interest rate sensitive. People are taking $1,000 a month car payments. So this economy is just strange. You got inflation, you got tech companies announcing tens of thousands of layoffs, big mortgage companies and bankers destroying their mortgage departments, destroying their real estate departments, real estate employment coming down. but still jobless claims staying jobs and jobless claims low, jobs high, almost two jobs for everybody looking for one. So it's just the craziest, weirdest recession I've ever seen. I'm happy to say that we're going to have divided government come in January, so hopefully they'll spend all their time investigating each other and doing non-productive stuff rather than trying to help us like they do all the time. Crazy, crazy times. It's going to be a crazy finish to this year. As we know, inflation is still really high, guys. You know, they're celebrating 7.7%. That's not a number to celebrate. I think that the market has false hope that the Fed is going to give up on this inflation fight. I don't think they're going to. We're going to get a rate hike coming up at the beginning of December of at least 0.5 point. I'm guessing it's going to depend on what those inflation numbers come looking like before their announcement, if there is one before their announcement. Then they'll know anyway. I think that the inflation numbers, although they're not the shocking over 9% they were, just a little under 8% is not significantly better. At least it looks like we're making headway, but the first time there's any kind of disappointment as far as inflation. Okay, imagine it goes now from the 7.7 last month's report to 8.1 this month. How do you think the market's going to react to that? So I tell you guys, this tightening cycle is just starting. We're closer to the beginning than the end here. And as I've been saying on the show many times, this is the end of the easy money era. The times now are going to go back to what they were before the big rate cuts of the dot-com era, where money costs money. It's supposed to, right? So savers are going to get rewarded as you're going to earn a little bit more money on your savings, as you're probably already seeing. You know, my simple savings account now at my bank is up to over 2% from zero. Money markets are more. If you go looking around, you can easily find 4% CDs. So savers are going to get rewarded with this, and borrowers are going to get punished. So if your lifestyle revolves around borrowing money, a lifestyle change is imminent, guys. Time to start. Let's get ahead of this curve, okay? If you've been listening to what we've been saying, you're already saving more money. You're not adding on any new debt, and you're trying your best, even in small increments, $10, $20, $30 at a time, to pay off the existing debt you have. Things are going to be looking good for you when this inflation's over, because you're going to have money, your money is going to be earning money, and you're going to have less debt. An enviable position, because it's just not a position most people are in right now. Anyway, guys, that's it for the day. We'll be waiting. Tomorrow we'll talk a little bit about some of these earnings reports and what they mean for the economy. Wednesday's the big day. We're going to see about our schedule. I know we probably won't put a show out on Thursday. We'll see about Friday if there's anything interesting we need to go over with you guys to wrap up the week. But in the meantime, guys, that's it for the day. We appreciate your support. As always, if you like what you're hearing, hit the like button. Ask your questions and comments. You can always, if your question is more in depth, if it's something you would want to put into the comments section, ask Chuck Barone at gmail.com. Again, it's askchuckbarone@gmail.com for your more in-depth questions. We'll be back tomorrow to wrap things up. Until we talk then, guys, take care. Thanks.